Majority of the investors or traders in stock market would love to do short-term investment. Investments, it can be a swing trading, where swing trading, what does swing trading mean? Swing trading means you invest, you get that swing opportunity, right? From a swing low to a swing high, you get that opportunity. So it can happen in couple of days, it can happen in couple of weeks, or it can happen in couple of months, right? The swing trading or the momentum investing. Let's say a particular sector or a particular theme is under very high momentum, then that theme, when it is in a high momentum, we invest into it and get that return. Be it like maybe defense, if it is in a high momentum, automobile, OEM, original equipment manufacturers, right? If it is in high momentum, we invest and we get the return. So this is for short-term investment. So there is a difference between short-term and long-term. Any investment you are doing for less than 1 year comes under short-term investments. Any investments you are doing for more than 1 year, 3 years, or even 5 years, that's called as long-term investment. So what we will do, we will learn today how to become a short-term investor, and all those who are already short-term investors or who are investing for the shorter period, what are the things we have to be more cautious? What are the advantage? What are the pros? What are the cons? And what should be the qualities of a short-term investor? And let's discuss the entire ball game of how you can become a better short-term investor and find those opportunities for a shorter tenure of time. Okay. So without any further ado, let me share my screen and let us discuss on how to become a short-term investor, right? Short-term investor. So we'll be dividing this into 6 key segments, right? Key segments, which are like, what are the key factors? What are the steps to follow? What are the strategies available? Qualities, right? What kind of a qualities we have to develop, and the pros and the cons of the short-term investor we will be discussing. Firstly, let's move into the key factors, right? What are the key factors? So for a short-term investor, he should have a clarity on uptrend and downtrend stocks, right? Uptrend and downtrend stocks. So one golden rule, if followed very diligently instead of your emotions coming into place, is in market we have uptrend, downtrend, and side trend. There is no other trend, right? It can be either an uptrend, it can be either a downtrend, or the stock may be consolidating, or it will be going into the sideways, right? That's called as side trend. So whether a bullish market or a bearish market, the stock is continuously moving down, averaging down or entering into a stock during stage 4 is like killing the portfolio. So you should have a clarity on uptrend and downtrend stocks. If you're a short-term investor, yes, you have to spot whether the stock is in an uptrend or is it is in a downtrend, and we preferably pick uptrend stocks. And short-term investing, right? Momentum within the sector will assist in the overall returns. So yes, you have identified a stock which is in an uptrend and even the overall sector is looking good, then that's a stronger bet you are taking, because the momentum is there in the entire sector. So when the sector is moving, the probability is high where the stocks within the sector also will move. Third, entry and exits will depend more on technicals. So few people ask me, sir, I have observed a stock which is in uptrend, point one clear. The sector is also stronger. Many of the stocks are also moving, and there is a news that yes, government is going to infuse fresh funds into it, right? Fresh funding is going into it. So sector is strong. But the problem is, I've seen the last 4 quarters, sales is reducing or the margins are reducing for the last 4 quarters. So is it good to enter? That's why I said you have to have a clarity whether you are investing for short term or long term. If you are looking at short term, your entry and exit will depend more on technicals. Note down this, more, right? Will depend more on technicals, which is price and volume, right? So once the stock is doing good on short term, sir, I'm already holding this for 6 months, I'm already holding this for 9 months, I'm already holding this for 1 year, right? I've added like 3-4 tranches, I'm already at a 50-60% profit. Now what should I do? That should be your question, right? So after holding for 3 quarters or even 4 quarters, like 1 year, you have made some 50-60% returns, 3-4 tranches you have added. Then what you do, your entry happened mostly because of technicals. After some time, Then you should look at fundamentals. Okay, earlier the quarterly results are bad. Now are the numbers coming good? Right? If fundamentally it is improving, then you hold it for a long term. I repeat, for short term, we look majorly on technicals, price and volume. For long term, we combine technicals and fundamentals, right? So, yes, on a longer period of time, you should become a techno fundamentalist, right? Technical along with fundamental information we have to add. So, now apart from the key factors, let's see what are the steps we follow. First of all, when the stock is in the trend, right? When the stock is in the trend, upward or downtrend, if you look at this image, if you are looking on a stock which is in a uptrend market, you get a pattern of higher low. And if you look at a downtrend market, you get a pattern of lower high. So you see here, this is your high. So this is your high. This is again higher high. This is again HH, higher low. Right? If you see here, this is your low. And again, this is your higher low. Right? Higher low. So yes, your point L, and this is the next higher low. So this is a triggering point for you to buy, right? So any pattern with a HH or a HL formation, right? HH or HL formation would be a strong reason for uptrend market, or the stock is in bullish. So we should execute our buy orders. Uptrend, it signifies that it is an uptrend, right? Even if you see here, strong candlestick pattern on the trading points, strong bullish candlestick at the higher low point, right? So this higher low point. Similarly, if you look alternatively, so this is a pattern where it is going downwards, means it is a downtrend, right? It's a downtrend. So it is a lower high formation, right? It's a lower high formation. So this kind of a formation, when it is showing a strong bearish candle, that is where we exit, right? That is where we exit. And whoever have been doing bottom fishing or trying to average down a stock would normally add here. But what does the process say? Process say, this is where you need to move out, right? This is where you need to move out, right? So higher high, higher low, HH and HL formation is an uptrend, and lower high, right? Lower high is a pattern for a downtrend market or a bearish market, which we exit, right? Which we exit. The earlier you exit, the better it is. And then the steps to follow, we enter at the right time. So if you look at this chart, right? Every stock, when it enters into consolidation, right? Consolidation phase. So if you see here, yes, the stock has been very bullish. It has been increasing, right? It has been increasing. Even, sir, few of the stocks which I have observed have been continuously increasing in the last couple of days, right? In the last 1 week itself, the stock has moved by 15%. I still see a strong volumes, right? So if let's say this is a setup, this is one stock which you have observed, and below the chart, the volumes are also coming up very strong volumes, which means more number of buyers. So first thing, yes, this company is a good example of a strong uptrend. But remember, it is ideal for you to enter at a lower level. But if the stock has already appreciated by more than 10%, 15%, you're taking a higher risk. So what you can do, you can wait for the stock to tighten, or you can wait for the stock to consolidate. So if you see, this zone is called as consolidation phase, right? This zone is called as consolidation phase. So there are different ways to interpret. One, yes, after a continuous move, the stock is taking a break, right? It's just like a breathing phase. Second, weak investors would be exiting, right? Yes. Sir, I have randomly entered someone has suggested, someone has recommended. So I've just taken a random trade. And after I made some 5%, 10% profit in 2-3 days, when it has given a red candle like this, I exit out of it. I just book my profit, right? Weak investors. Third, it is in the sideways phase when there is demand and supply equal, the stock will be consolidating for a period, right? Consolidating for a period. So this is the zone you can wait for re-entry, right? You can wait for re-entry. One, after the stock has moved very high and for a couple of days, it is just moving sideways. So all the candles, right? If you see, these are all the candles, the lower part of it, wherever it is touching, that's called as your support level, right? We have studied earlier also. The flooring is your support and your ceiling is your resistance. So all the candles high when it is touching, that is your resistance, right? You have your support and resistance, and this consolidation is the consolidation phase. Once you see a candle like this is our triggering candle, right? This is our triggering candle. Once the candle breaks the resistance, right? Once the candle breaks the resistance, and even in this image, if you have the volumes also coming here, yeah, let me represent volume with red. If the volumes are also coming strong, then this is where you enter. Two things. One, sir, I'm already there in the stock. During the consolidation phase, you do not enter. As you're already there, this candle gives you a reason to add more. What do you do here? You add more. After the consolidation is done, you add more. Sir, I'm not there. I've missed this rally, but I wanted to be there because the stock will do good. I know, but the volumes are good, the momentum is good, sector is good. So what you do, as you missed this rally, wait for the consolidation to happen. And after the consolidation, this candle, use it as your first entry. Here you can enter. Right? Here you can enter. So yes, entry at the right time is also important, right? Entry at the right time. So you can ask me, sir, what if instead of entering at this candle, the stock has moved like this, right? If I am entering at this candle, what will happen? Right? If I'm entering at this candle, what will happen? Only thing is that you're taking a higher risk, right? You're taking a higher risk. So what I would suggest, the closer to the breakout or the closer to the resistance is more ideal. And even if it has moved little bit more, the bracket should be between 4 to 5%, right? 4 to 5%, which means from the resistance, it has moved above by 4 to 5%, right? 4 to 5%. That is where maximum you can be. Beyond 5%, it has moved. You are taking a higher risk, right? The risk affinity has increased for you, right? Has increased for you. Okay. And the rule is, when you are winning, make it big, add more tranches, right? So this kind of a stock where, sir, yes, I have made some very good money, and after consolidation, it's again increasing, add more. Do not worry. Sir, here it is a 52-week high or all-time high or lifetime high. Is it okay? Is it like too stretched? No. When there is a strong price volume happening for short term, be there, right? Be there. The rule is, when you are winning, make it big, add more tranches, average up. And when you are losing, cut your losers as soon as possible. Have a strict stop loss, right? Have a strict stop loss, right? So these are the steps to follow to become a successful investor or trader, right? To become a successful investor or trader. Okay. And on the strategies wise, yes, we have strategies like breakout level, support and resistance, and moving average, right? And moving average. So we preferably use exponential moving average, right? Exponential moving average. So if you see here, in the earlier example, as we have discussed, we had our support and resistance, right? When the stock is moving above the resistance, right? The longer the base or the longer the resistance, it is more powerful, right? And that breakout also, if you let me show you with this image. You see here in this image, right? In this image, this resistance zone is the breakout, right? Is the breakout. So if the candle is breaking this resistance, it's a breakout. And because of any reason, if the candle is going down below the support, it is a breakdown, right? Breakdown. So even when it is moving below your consolidation zone or breaching the support level, this is where you reduce your position. But here, when it is breaking out, breaking the resistance, you add more, right? You add more. So these are the strategies which we follow. And exponential moving average, we follow a daily exponential moving average 21. As long as the stock is trading above the EMA 21, the trend is strong, right? The trend is in uptrend, right? The trend is in uptrend. And to look at the qualities of a short-term investor, avoid illiquid stocks case, right? So yes, short-term investment means you are taking a higher risk, but there follow certain ethics or follow certain rules, because until and unless you are a pro, or until and unless you have a very good experience for a very long period in market, preferably avoid illiquid stocks where there are no good number of outstanding shares that are exchanged between the investors. Because any stock you see a sudden spike in gap up or gap down, or even every day the stock is touching upper circuits, 5%, 4% upper circuits, and it's moving and the trading is halted, those kind of an illiquid stocks are very risky, right? Are very risky. Second, do not overtrade, right? Do not overtrade. Sir, yes, I have made some good profits, right? And as I made some profit, with this profit, I enter into random companies. No, right? A good player knows which ball to hit to the boundary. Every ball he will not try to hit the boundary, else he will get bowled. Our intention is to be in the game, not to get bowled, right? Even if you play slow, wait for the exact ball to hit your bat, wherein you can move it to the boundary, right? So do not overtrade, do not over own, and stick to the stop loss, right? Stick to the stop loss. Yes, sir, this company I have analyzed for 2 weeks, 3 weeks. I have kept my sweat into this chart. I've analyzed a lot, but still it is going against me. It has hit my stop loss 8% or 10% is my stop loss. It has hit. Overcome your emotions and be prepared to cut your losses as early as possible, right? If you are not ready to take losses in your investments, you are not prepared to take profits, right? As I always say, if you love red, then green will love you back, right? If you love red, then green will love you back. So be prepared to cut your losses and overcome your emotions, right? Overcome your emotions. And what are the pros for a short-term investor? One, time flexibility. Yes, you can enter anytime. You can just find out the opportunities, right? And you have a time flexibility. Potential for higher returns. Yes, people ask me, sir, for a short-term returns, when I'm paying on the taxation for long-term, more than 1 year, my capital gains is 10%. But for short-term, it is 15%. So should I do short-term or long-term, right? Instead of worrying on the taxation part, focus on higher returns. In a short term, in a 1 month, 2 months, you are making 30% returns, right? It's okay to pay 15% on the profits, your capital gains. Even during the year, you can look at offsetting your taxes also, right? Offsetting your taxes. So look for gains. And in short term, yes, if the trend is good, if the momentum is good, there is a potential for higher returns, right? Third, less opportunity cost, which means if the trade is not going in your favor, yes, you can switch back to another company. You can book your loss, or you can exit out at break even, and you can reinvest into a better opportunity, right? Opportunity cost is less. And transaction charges, yes, you can choose a discount to service broker, be it like Upstocks, right? Or Zerodha, or your 5 Paisa, right? Many platforms, right? Grow, right? Grow, whichever platform you are following. So any platform where it is a discount to service broker, on the transaction charges, you can reduce. And what are the cons, the disadvantages? Risk exposure is high, right? So until and unless you are already there in the market, you learn the concepts, then you do on the short term investing, right? Even if you're investing, invest with a horizon of holding that stock for a few months. Sir, I'm first time investing into short term or swing investing or momentum investing. If you're a beginner, your thought process should be, yes, I need to hold this stock for a couple of months. Yes, mentally I'm prepared to hold it for a couple of months. You have been successfully good, then you have to be like, yes, this stock I'll be holding for a couple of weeks, right? Yes, you have been doing good. Then if you are very successful there, okay, this stock I'll be holding for a couple of days, right? Maybe 10 days, 15 days, right? Then you move to intraday. Directly you start with intraday or directly you start with very short term trading, the risks are higher, right? Risks are higher. So you have to choose in such a way that you do it in the right path, right path. So the disadvantage is, yes, risk is high, you lose long term benefits. Yes. So let's say, sir, I've been in a very good company, I've made some 15-20% returns, and yes, I felt the stock is consolidating, so I've removed it and moved into another stock, because you're a swing trader, you're a short term investor. Now this stock, over a period of quarters or over a period of months, if the fundamentals are also improving, it can be a wonderful long term company. So yes, in short term, there are few trades, as we switch, as we move, you may miss the long term benefits. But yes, that's the differentiation between short term and long term, right? And that's why I always say, even I should have mentioned this at the starting, but let me tell you here, whenever you have a portfolio, divide your portfolio into 60-40, 60% long term and 40% short term, right? So give more importance to your long term stock 60 and short term 40%. In the 40% you can play in the overall portfolio. So I have a 10 lakhs portfolio, 4 lakhs into short term and 6 lakhs into long term stocks, and trade opportunities are limited. That's why I said, do not hit all the balls you get to boundaries, right? Restrict your trades, see whether our system, the process, the steps which we need to follow are exhibiting or not, right? The trade opportunities are little bit limited, right? Are little bit limited. So yes, these are some of the steps or some of the process which, when followed, will help us to give great returns, right, for your short-term investments, right? Let me tell you, everyone can learn, everyone can invest into the market if you have a process, if you have a system that you're building for yourself. So someone who are like beginners or just starting out, yes, everyone can do it. It's just that the journey you have to pass through, right? The journey you have to pass through. Okay. So I hope everyone loved this discussion. What are your key learnings from this session? You can mention below, right? Okay.